Hey everyone, it is Evan here from the Trade Risk on Friday, August 16th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So markets all over the place this week. Let's jump into our dashboard. Let's try and make some sense of what went on here. All of the major indices had a strong finish to the week. We were up about 1% or more on Friday. IWM really taking charge here, up 2% on the day on Friday. But you can see on the 5-day change numbers, we are still in firmly red territory right across the board. The Qs kind of acting best in class over the past week. We can see that we still have a mixed picture here in terms of how the major indices are dealing with their 10-period simple moving average. We got two below, the Dow and the IWM, and then we have the SPY and the Qs, which are above it, and we are still above a 50 SMA and a 200 SMA for all of the major indices. Now, if we scroll down and take a look at sectors here, it had staples at the very top here, outperforming 1.5% over the past 5 days, followed by semiconductors and utilities, so a fairly interesting mix there. I think we had NVIDIA earnings, which helped catalyze that side of the semiconductor market late in the week. And then on the downside, we had XLE, we had transports and financials, kind of the big three there, all underperforming. Those kind of industrial complex, the old heavyweights, underperforming to the downside 3% to 2% over the past 5 days. In terms of major markets, it's TLT, which has really gone parabolic recently, up 4% on the week, followed by natural gas and VIX, which is still up 3.84% over the past 5 days. And on the downside, we had equity markets, we had the S&P 500, we had emerging markets, and we had China, all down slightly, up to 1% lower. So let's jump into the charts now. Let's take a look here at the weekly time frame. This is where we like to always start our analysis. Just get the big picture in our head on the weekly basis. This is the cash market also for the S&P 500, and each bar represents 1 week worth of trading. So looking here at this week's candle, it was another wide range, volatile trading week. We covered the entire range that we did last week and then some. In fact, we tried to push up above last week's highs briefly. We came all the way down, almost undercut it, but basically tested the lows of last week and ultimately kind of bounced higher to settle in the middle of this range at 2890 for the S&P 500. Structurally speaking, nothing changed at all this week. It was a total noise, back and forth choppy week, trend-wise, and major lows or major highs, everything basically remained the same. We've essentially had this turbulent period which started 2 weeks ago on Friday, the first close of August here, where we had this breakdown all the way to 2930. We took out the prior 5-week lows, and that really set up the VIX kind of spiking over 20, and we've seen the very choppy, erratic behavior in this 2822 all the way up to 2940, about 100 so point range there, a little over 100 point range in the S&P 500. So going forward, we really have the same exact levels to look at. For me now, the highs and lows of this week are very important. If you're looking at SPY levels here, it would be 282 to about 294. That's about the range here from low to high. That's been the range now for the past 2 weeks, and there's been a lot of choppy, kind of emotional, headline-driven trading in this time period with lots of volume coming in. So the bounds here from 2825 all the way up to about 2940, those are the important sort of goalposts that you want to have kind of etched out there and paying attention to when we start to get to one of those extremes. Kind of wait to see if the market will tip its hand and break in that direction. So those are the nearby levels. Of course, above that, we still have the 2955 area. That's the prior highs back from April of this year. And then we have on the downside that 2800, that key round psychological level that's played an important role for markets in past years. 2800 below us if we start to break down below this week's lows. So that's about it. Everything pretty much, same comments apply to the recent videos that we've been talking about. If we go down to the daily chart for the S&P 500, we had our midweek video right on here on Tuesday. And on Tuesday, life looked pretty good for the bulls. I mean, we had a lot more of an encouraging sort of look here to the market, where we started the week off to the downside on Monday, and then we came really ripping back strong on Tuesday, came all the way back, and again, we tried to pop above last week's highs and then just kind of tapered off a little bit. So this was sort of an exciting time where, maybe the higher low got put in, the stabilization was happening, but unfortunately, we could not get to the end of the week that way. We had just a very swift drop here on Wednesday, some heavy selling, and just really kind of what turned out to be a little minor capitulation day on Wednesday. We couldn't get any follow through on Thursday. We tried intraday, right? We tried to continue lower here. We got as low as 28.25, but we reversed and we closed green on the session. And then we had the strong kind of gap and follow through day on Friday to the upside. So really, it has been a yo-yo. It's a difficult market to trade. This is why I've been sitting on my hands here. Haven't actually placed the first trade. First buy trade was Friday morning, was this morning. Was the first time I've basically done anything in the past 2 weeks, as we started to get a little bit of clarity here with this kind of gap up and move to the upside. But all in all, we are still range bound. I think based on today's strong close, the fact that we held this gap, we kind of had a gap and go day on Friday here, we are kind of cleared to perhaps move back up into the top end of this range. Let's maybe see if we can get back up to the 2930s, 2940s early next week. If we can do that, that's encouraging. And then of course, we'll need to see if we can actually break out. But, as exciting as this is right here, this 2-day move, we A, still need follow through, and B, again, structurally, nothing has changed. So we still need to, kind of taper the excitement here. I know we put on some long exposure at the open today on Friday, but it's really for a quick tactical trade still. I'm not looking to be a hero or dig the heels into this market whatsoever. If we start to lose, frankly, the lows here on Friday, will be out of the trade and just, kind of scratch it and not look to get too aggressive on the long side. So I think it's still a market you need to be nimble with. The VIX is back down below 20. I think we closed about 18.5, which if you look at a weekly chart of the VIX, it's basically exactly where we were last week on Friday. We had almost an identical tail all the way up to almost 25 this week, and then settled back down below 20. So once again, all the same things, all the same comments that we want to look for is we just want to see increased stabilization here. We want to see those ranges start to compress. We want to see the volatility come out of this market, the VIX start to unwind a little bit further. And then, of course, we need to break above 2940 or so to start making our way and making progress to the upside. So all in all, two-way trading market, that's what we're dealt with. That's what we're still looking at. The IWM, again, kind of saved itself here on Friday. We had an ugly looking kind of Wednesday, Thursday combination here. We sort of looked over the ledge at potentially breaking below the June lows, and then there's lots of air below the June lows, but so far the bulls are holding on here. We had this nice strong bounce on Friday. Let's see if we can hold those gains, follow through next week. That's going to be important. Otherwise, this 146 area, again, if we start to roll back over from these levels, you'd want to be at least paying attention, defensive, concerned, whatever it is appropriate for your strategy and time frame. That's what you'd want to have on top of mind. If we finally look at the Nasdaq 100, last but not least, you can see very similar to all these other markets here, had the nice gap and go type of day here on Friday, saved itself on Thursday. Notice this didn't get as kind of beaten up here throughout the week. In other words, we didn't undercut. So if you just look at the structure here, look at the IWM, we undercut last week's lows, and then we had this nice kind of pushback above it. If we look at the Qs here, notice we put in sort of a higher low here, and then we kind of bounced to the upside. The one thing I don't like about either of these markets or any of the major indices and really a lot of individual stocks right now is there's no good kind of positive momentum divergence or anything. Right now, the momentum is over the past 2 weeks or so has really just favored the sellers at the magnitude and the sort of velocity of the move that we saw to the downside. So again, that also gives a little bit of hesitation here of being aggressive on the long side beyond just, quick, nimble, tactical trades. So that's the outlook. That's what we're looking at heading into next week. More chop. Again, same comments. You don't have to trade every day. Stay defensive if you want to. Sit on the sidelines. Wait for your setup. I think those are all reasonable things to think about if you're actively trading this market. Now, getting into some of the other major markets, we'll go to TLT next, which has gone really parabolic here. In fact, if we go to our other board here, you can see this is just ignited from this 2-month sideways range here. Tons of volume pouring in. Remember, this started back in May. It started earlier than that, but the acceleration started in May of this year. It went sideways for a long time, and then it's just really taken out to new extremes here. It's making new all-time highs here for TLT, and in fact, I think if we can pull up, see if I can pull up a quick study here, distance from the 20 SMA, just for fun. Let's take a look here at how far the TLT is right now from its 20-period simple moving average. Again, just for illustration purposes, not saying this is a trading signal, not saying this is anything elaborate, just kind of a fun study. And if I zoom out as far as I can with this chart on a daily time frame, so going all the way back to 2013, take a look at where we are in terms of a distance from the 20-period simple moving average. We're orders of magnitude beyond any of the usual sort of noise in here to the downside. So this is pretty extreme move here, quite parabolic. Again, these moves aren't easy to fade, of course. They can continue to stay, extremely elevated as everyone is sort of in disbelief here. So you have to be careful, but of course, it's certainly not a recommended chase at this point for by any means, but you can see even the dip today that was down below 145 got kind of scooped up a little bit, and we're closed back around 146. Momentum still holding pretty strong here. So TLT, very stretched. Manage your risk appropriately if you're in the trade, and if you're shorting it, then just understand your risk and understand sort of the animal that you're shorting. So that's TLT really running away this week as a safe haven, 4.34%, third strong consecutive week of very high gains with lots of volume coming in. If we look at GLD here, the other safe haven asset, this was still up here on the week 1%, but a little more tapered, a little more normal, still very high volume coming in. You have to basically go back to 2016 to see the amount of volume that we saw this week in the GLD Spider Gold Trust here. So lots of volume came in this week for GLD as it moved up 1%, extended itself to new year-to-date highs. And you can see now on the year, let's just take a look at where gold is on the year. It's up now 17, almost 18% here on the year. So very strong performance there, very strong sort of quick move for GLD. It does look a little bit tired here. You can see it's just kind of slugging, gradually higher, but just inching higher, but sort of flattening out a little bit. So I think gold, TLT, both, reasonable to expect a pullback here in the coming days or weeks. But again, timing is everything. So manage risk in the meantime. If we look at silver, silver next here, you can see also was slightly higher. Yeah, it was up on the week, 0.82%. Did not take out last week's highs, but still a solid week of performance. Good volume. Again, kind of going sideways here, maybe looking a little bit tired. It's had a strong run, so very similar comments here. Might be just due for some sideways action or a pullback here in silver as well. If we go to commodity oil here next, you can see it was up 1% on the week, but that was well off of the highs of the week. We got almost up to that $12 back here on Tuesday. That's where we had the big move to the upside, 4.5%. We gapped down pretty abruptly on Wednesday, and then we just kind of slugged sideways here. So for me, USO still kind of in a messy, choppy area here. There was a very strong trend to the upside, a sharp rebound off of 1050 or so. So in the short term, bulls still in control here, but sideways now, and we'll have to see how it contends with a lot more of this overhead supply in this area. Natural gas did finish the week up strong, 3.5% to the upside. We've been watching it, did not end up initiating a new trade ourselves, but we did look at this here as the positive momentum divergence really kind of took place, and we can see we are working ourselves back up into this range here. So bulls short term in control. Again, longer term picture, this thing is still a disaster pretty much on every longer term time frame. Natural gas is in a downtrend, so you do have to be careful and just understand the animal that you're dealing with. But for that short term kind of tactical mean reversion pop back into this range, it certainly is kind of in full effect right now. So that covers all of the major markets. Let's take a look at some sectors now. Let's sort it by top performing and bottom performing sectors. Let's take a look at the top performing sector is staples. You can see staples here moving back and getting closer to these all-time high levels. Otherwise, not too interesting. No real clean kind of trade setup there that I'm seeing just kind of a defensive area of the market working itself back up towards highs. Utilities a little more interesting here, just from a kind of breakout classical range perspective here. We've had clear resistance around 61 and a quarter. You can see it is starting to, and in fact did get a close above that to new all-time highs here for XLU. So we are getting a breakout in motion. So for utilities, staples, these are working right now, which again, I don't think is too much of a surprise. And semiconductors this week was up. 5-day return was up 67 basis points here. Strong finish here on Friday, 2.5% to the upside. Again, this did get sold off pretty hard here over the first kind of entry, first week into August. Came all the way down to $108. It's been bouncing around since. It's been holding on to these lows. Really not a whole lot else to say about it. Kind of still would want to be patient here and let's see if bulls can really kind of firm up and stabilize around 110. I honestly would like to see more sideways here, but it is holding up as of right now. On the downside, XLE is pretty much, getting real close to coming back and retesting the January lows here. So most sectors are pretty well off of the, and still holding well above the early year highs, where we basically just went V-shaped in a very fast fashion for 5 weeks. XLE is almost back to sort of testing that. Of course, there's still some room in here, and it did rebound on Friday, but you can see it is just structurally much weaker than a lot of the other markets, 3.5% down this week. So pretty much in a void there for my taste. And XLF 2%, 2.21% to the downside this week. Lots of volume coming in recently. 25, 26 area. This is a busy area for XLF. It's just dealt with a lot of supply and trading in this level, so it's going to be a good spot for it to hold. It'd be an important spot for it to hold. No divergences right now, just kind of slamming back into 26. So really not too interesting to me. I mean, good for maybe a dead cat bounce, but I'm not sure there's anything more there as of right now. It just needs more time. Last but not least, discretionary bottom three, rounding out the bottom three, down 2% this week. You can see this also kind of in no man's land here. It sold off pretty hard coming into the month. It has found some support, or at least rebounded initially off of the last week's lows around 115 after undercutting them. No real divergence going on here in momentum. Volume's high. So for now, just kind of a wait and see. No real strong opinion one way or the other. So that is what I got going on for this week. It was a lot of action this week, but ultimately didn't go too far after everything was said and done. So again, just manage your risk appropriately. Know what type of trader you are and what you're trying to achieve. Make sure you're in the right environment for your objectives. So that's it. Thanks so much. As always, enjoy the weekend. You can subscribe on our YouTube channel, follow us on the Trade Risk, and we'll see you back here next week.